Like bring in Rebecca Patterson, Chief Investment Officer at Bessemer Trust, and Ben Mandel, a Global Market Strategist at JP Morgan. Good morning, guys. Thanks for coming.
Good morning.
The last point Eunice made is a good one, because the implementation of this will take a long time. There's public feedback. There's 180 days after that if the government decides whether to do this. So do markets get caught in crossfire, all this brinksmanship?
You know, what we've seen so far is a pattern, whether it's on NAFTA, whether it's on going after the Chinese renminbi, whether it's solar, where we get these scary big headlines or tweets, and then the reality sometime later is a lot watered down and more nuanced and has less of an impact. I'm hoping this ends up being the same, and I don't think many people in the U.S. business community want a trade war, so that commentary period will be important. I think could be successful in watering it down. I think the challenge for markets is that we have this up-down, manic, depressive environment where we don't know if it's going to be okay or not, and it's changing so rapidly. If this continues over time, eventually it feeds through into business and consumer confidence and can have an economic impact. That's what I worry about the most right now.
Yeah, you know, Ben, the Commerce Secretary is right. It's not as though we didn't know that the Trump administration was focused on things like the theft of intellectual property and was going to make a response. Or to Rebecca's point, has not already targeted solar or dishwashers, whatever you want, and steel, of course. Yeah. That said, we're all trying to figure out, when do you know when you're actually in a trade war as opposed to these skirmishes? Yeah. Do you have any idea?
Well, I think, you know, at times like these, it's helpful to take a step back and remember the context. So the U.S. economy is strong enough to withstand some uncertainty associated with trade and some uncertainty associated with idiosyncrasies in tech. If we were to rewind about a month, you know, prior to right now, and go back and actually peel away those uncertainties of the trade skirmishes and tech, I think we'd find a generally positive fundamental story. You know, you have a labor market that's solid. Consumer spending took a pause, but it's well supported. Businesses are confident and CapEx plans are robust. Inflation is rising, but the policymakers aren't responding in too aggressive a manner. So what we worry about in terms of is this a meaningful trade war? Is it to the point that it's affecting business confidence in a meaningful way? And I don't think it's sufficient to do so.
You don't think we're there yet?
I don't think so.
Will you know when we are?
I think we're at the beginning of a process, of a negotiating process that could take some time. And I think actually, you know, if we think about what is the scale of aggressiveness of international economic diplomacy, I think, you know, we're not that different in principle from the previous presidential administration, which was already pushing the rules of enforcement under current WTO rules. It's important to keep in mind this is not a unilateral tariff. You know, the administration was at pains to justify this within the context of WTO law. So I think we're still within that institutional framework here.
Whether it's a trade war, a skirmish, a warning shot, Rebecca, clearly there are winners and losers being picked right now. You're seeing declines, sharp declines, soybeans, cotton futures, a lot of the agricultural makers, John Deere down sharply here in the pre-market. So what's the strategy going forward, not knowing whether these tariffs are actually going to be implemented for real and whether it's going to escalate?
So I think, picking up on something Ben said, the economy right now in the U.S. and globally is strong. We saw that in the ADP numbers this morning, very good job numbers. So you've got this economic reality that tells you to stay invested, but we have a rising level of uncertainty that could change that picture. Our strategy has been to be neutral equities versus a benchmark. So we're invested but not over our skis. We don't want a Wile E. Coyote moment. And then we've added some defensive strategies within those equities over the last year that help us manage through the volatility. So, you know, we're staying invested, but we've gotten more defensive over the last year because we didn't know what the day would be or the catalyst, but we saw more volatility coming.
Can you describe some of the defensive measures?
Yeah, so this isn't about utilities or high dividend stocks. This is about getting a basket of equities together that are from different regions, sectors, have different drivers. So when you put them together, the diversification between the equities brings down your volatility. And that usually we get about 60% of global equity volatility in that. And that definitely helped our portfolios over periods like now in February.
Usually the dollar is a safe haven. It's not looking so safe.
Yes.
In the middle of all of this trade back and forth. Japanese yen.
Yeah.
I know you guys have been
Here we
talking
are.
about it
We're
every
10 minutes
single
in.
day.
She's back.
Got it.
Let the
Is a Lagarde reference
let
next?
the record show 10 minutes.
5.5% since the birth date of my son's 12/9/2017.
So Sarah and I are both currency nuts, so we're going there. And
Go
I
ahead.
think this is another.
We actually missed it.
This is a tool in China's toolkit. They have $1.2 trillion worth of U.S. treasuries, and they're not going to sell them all because they'd hurt themselves more than anyone. But all they have to do is stop buying as much. If they slow down purchases at a time when U.S.
They've already been slowing down purchases,
They
though,
did,
haven't they?
After they went up for a period last year. Just in the last month or two, they've come down. But if we see that repeated a month or two, or we start seeing it up at the weekly Treasury auctions, more soft auction results, especially at a time when the U.S. is increasing issuance to fund all this wonderful stimulus that's being offset by trade wars, then we have an issue. They can do that.
The Journal takes a look at their leverage this morning, and they argue it's not what it was a decade ago because of the debt trap that they're in and the return on assets, especially with state-owned enterprises in China. So, I mean, what is their leverage with us right now relative to what it used to be?
Well, I mean, it's the second largest economy in the world, so it's the economic cloud of China is clearly very high. But on this point of how do you hedge in this environment, I mean, in principle, a big economy implementing trade measures and a retaliatory war, which should be a growth shock. And when I look at the 10-year Treasury yield down a couple basis points, that's actually not providing its typical protection against that type of growth shock. So it's interesting.
Well, you got ADP running 241. Right?
Exactly. So the
Or
Treasury
is it about
yield,
inflation running a little hot?
Or is it about issuance doubling from a year ago?
either way, I mean, what you have is duration is just less effective as a hedge within your portfolio for big equity positions. And so I think, we're still okay on the direction of travel of risk assets in our multi-asset portfolios, but we're taking slightly smaller bets given that we don't have as many hedges as we used to.
By the way, guys, Bitcoin would not have been a good hedge either in the time that I was off.
Lagarde,
more than 50%.
yen, Bitcoin in the A block.
We covered it all.
Yes.
I'm glad.
On Sarah's return. Aren't you going to save anything for the E block?
Yeah,
When
no,
is
we've got more.
Margaret
I've got more.
Vestager going to come on with us? I hope so.
Hopefully soon.
Yeah.
She's actually got a trip coming up.
We
in
do
April.
want to hear from her.
Okay.
Rebecca, Ben, thank you guys.
Thank
Good
you.
to see you both.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.